Righty ho, everyone, and welcome aboard. Thank you for joining us. Happy New Week to you, in fact. It is, what happened to my clock? My clock just went haywire. I'll get used to this one day. Hope you had a wonderful weekend, by the way, and looking forward to a brand new week of trading that hopefully is profitable. That's what we're aiming for, of course. Mixed scenario for me last week with actually only two trades that got in the market. I think one up, one down. Aussie 200 and S&P 500. Aussie 200 a winner, S&P 500. No, we got into Euro CAD. That's right. That was a winner. However, I've got to update that after we've done the pound. We'll do the pound. Euro CAD was a small winner, not a good winner. I thought I was hoping we'd get a good. Oh, lots of different things going on. With any luck at all, you are seeing my screen. Yeah, I did. I forgot to. I thought I did. Well, I thought I did. I'll get it. Thank you, Sam. Thank you for that. Where was I? Lost as usual. It's Monday. Can't remember. EuroCAD. Okay, yeah, I was hoping for a good winner out of that, and the market turned around. NFP did a few funny things to the market, actually, and created some nice profit for some people, I'm sure. Unfortunately, I wasn't one of them. A little bit, but not much, but certainly not thanks to the NFP. Righto, what do we got to start the week with pound versus the dollar? We could do with a winner, as I think I said on Thursday. It would be nice to get a winner under our belt with the pound versus the dollar in the breakout. I hate this. This just looks so bad. It's a pivot sandwich as far as I can see on the pound versus the dollar. The range is pretty clear. There's the high, there's the low. I'm kind of hoping that we get stuck in the middle here and we don't get a trade, because it just looks ugly. It looks like we're going to just oscillate in here until something happens. What that something is, I have no idea. We do, of course, have the major news event of the week on Thursday, I think it is, which, of course, is the inflation or CPI figures coming out of the States. The market will be watching that very, very closely. Because it's so important at the moment. Inflation is the name of the game, and curbing it is the name of the game for central banks and governments. And they're not doing a fantastic job of that. I don't think. They seldom do. We'll see how that pans out later in the week. But leading into that, I would indeed like to be in the market pre-trading before that event happens. I think it will cause a little bit of a stir amongst we traders and those who are pay grade above us as well. Righto, we've got about a minute or so to go before this changes. If you fancy this, it looks like we will be trading. If this doesn't come back near the center, we'll be going long at 11320. I might as well set that up. So I have got an order in the market too. I'll share that with you as well. Ready, set, go. There it is. Right. Don't forget, very, very, very little money on this. Not break a bar. The entry will be at midpoint, which is 1.1320. And the stop loss will be at the low of the range, 1.1290. And take profit pips, 30 pips there. So 2.5 times 30 is going to be 75, right? So we'll set that at 75 pips. That's our exit. And our TP1 will be at the high, 1.1350. At which point we will simply move our stops to entry. So there we go, 1.1350. And stops to entry at that point, nothing off the table. There we go. We could do with the winner. Rightio, there we are. Entry there, stops to entry there, target there. Don't like the look of it, I've got to say. I do not. You like the gap sweep? Close, yes, but to get target. Weekly pivot right above the gap. Don't know. Yep. Okay, cool. You know what I'd like to see, Sweet? I'd like to see price get down to here and give us one of these. That one's dead, but monthly pivot, weekly pivot dead ahead. Pivot sandwich, I reckon. We'll see how it pans out. Anyway, what can I tell you? I can tell you that I did place an order this morning. I placed 2 orders, as a matter of fact. Long to get short. Yeah, could well be. Could well be. Pound Swissy on the daily. I've placed an order short underneath the daily bar on pound versus Swissy, and the entry level for that is 1.12460. Stop loss is 111 pips, which I think is 1.1357, if I'm not mistaken. And I'm going to take profit at 79 pips, which is 1.116 something, 7 maybe. I can't quite get the maths on that straight away. Sorry. I'm going to close 3/4 of the position. I'm sick of mucking around with this market. This market's giving me very little follow through. I'm getting to a support or resistance level, and it's just going ba-chung, straight back to our entry, which of course, if we've got our stop entry, okay, we make money, but we're not getting the full value out of this. So I'm going to close a little bit more at the first take profit level than I would normally do, just to get a little bit more money in the bank, if that's possible. Now, that's the first of those trades. Also placed an order on the weekly chart for pound Swissy, trading the weekly bar, which is a weekly game changer bar. Barely qualifies. I think there's very, very little in it. The high of the previous week is 1.15737, and the high of last week is 1.15767. So it does qualify as a game changer bar, and for that reason, I do like the scenario. The scenario, of course, being what we need for a game changer to be in context is for the major or primary, if you like, put it that way, trend and or I call it the big boss, the overriding theme, which to my mind can only be short here. I can't see this being a buy yet. It's got to get above lots of resistance before it's got to break trend, right? And it hasn't broken trend. So for that reason, and I don't see anything except this double bottom, which is being violated by the latest bottom. So I'm happy to trade this short after a rally, and that's what we've been dished up on the weekly chart, the game changer bar that suggests we go short. So in context with everything that I just described, happy to go short. Where to? Once again, this follow-through scenario that I'm not getting recently needs to be adhered to. So this level here looks to be a profit-taking level of some kind, and we'll discuss that maybe a little bit later. Is that where my first take profit is? No, it isn't. Why? Got another level in mind, obviously. Oh, it'll be here, I would imagine. Yep. So just before the open and close of those two bars there, that's where I'm looking at. Waiting room. I've got 3 people in the waiting room. I'll have to let them in. My apologies for not doing that. Admit all. Does this happen every time, Sam? Have I got to keep going back there, or can I put that on autopilot? Not sure. What is? The fact that I've got people in the waiting room. Can I just go admit all before we start? So I'll have to keep looking at that. That'd be good. Anyway, pound Swissy on the weekly charts is trading that bar ostensibly, and the entry level is exactly the same. Okay, cool, got it. Thank you. Is exactly the same. Stop loss, of course, is about double what the daily is, and for that reason, we've got a much more liberal, if you like, TP1. So if you want to follow that, happy days, go for your life. I'm aggregating my risk to 0.5% on this. It is a trend following trade, really. It's playing the reversal of a retracement. That's what we're doing there. Now, as far as I did say, EuroCAD is now, I'm now out of EuroCAD. And this is what I'm saying by the lack of follow through that we're getting, or that I'm getting anyway, in the market at the moment. Yep, we'll monitor. All good. Thank you. We did trade this short last week. This bar here is the one that we traded, and we took our first profit. Can't remember exactly where, around about here somewhere. Moved our stops to entry, and were at the whim of the market then. And the whim of the market said to whim away. Sorry, I couldn't help myself. It said, do not go beyond this level. And this was NFP time, right? I'm asleep at this time, so there's no way I could have taken any more profit unless I'd set the target, which I did not do. And of course, back it came, back to entry, took our trailing stop. So instead of having a decent winner down here, I only got a small winner. And that's really what the theme of my chat today. And I'll have a chat with George and Ash about this. And I know both of them are expert proponents of taking profit at good levels. And I'm just not at the moment getting what I need to get some decent money in the bank. Profit, yes, but could be much, much better. And that's why I'm closing 75% of the position on pound Swissy on both occasions. So EuroCAD now out at entry, having banked our first take profit. As far as today is concerned and this week is concerned, there are, well, 1, 2, 3, 4, about 7 or 8 game changer bars on the weekly chart. I won't go through them all. I think there are 3 that are possibles, the best of which is the one that I'm trading, and that's pound Swissy short. I do have 2 others on my watch list, and they are CAD Swiss. CAD Swiss, too late to get into this if you haven't already. The reason I haven't got into this is because I thought pound Swiss twice was enough trading against the Swissy, or with the Swissy at the end of the day. But this was the other. What I will propose here is if CAD Swissy can come down here, find this support level and pull back to maybe the pivots, and I'm in profit on pound Swissy, then I would look to add to this. Why? Well, because we're coming, and this goes back to, again, primary trend, of which there has been none since 2015 on pound versus the Swissy. So we've been in a range since then. At the moment, we've come off the top of that range. We've gone into a channel false break at the top of that, but we've bounced off the bottom, come back to the top, proving to me that this range is valid. And there's a whole lot of confluence here. You can see the confluence that I've got. I've got a resistance trade line. I've got a support trade line. I've got a horizontal level. I've got a bounce off the top of the channel. All I'm waiting for now is confirmation that this level is going to hold. And if it does hold, then this is going to be a short. As I said, you could have easily picked that up if you'd so chosen off this reversal bar, high test bar on a resistance trend line. The problem I have with that is that's also a slingshot set up to trade long. So I've got mixed emotions here. And because I'm above that confluence area with the tail, below it with the close, I do have a real conflict here. So I'm not terribly sure which way this is going to go next. I need confirmation of that. Best confirmation I could possibly get would be price to break out here, come back underneath the trade line, then retest the confluence area. Then I'm happy. Then I can go short. To trade it long, I probably need same in reverse. I need a support area through here and prove that to be false. That could in turn invite a head and shoulders or inverted head and shoulders to turn up, and we could trade it long. So what I'm saying at the moment is I don't know which way this is going, but I'm waiting for confirmation on either. As I said, if you wanted to jump the gun, you could have got into this short based on that candle there, but I thought pound Swissy was a far better conveyance than that. Pound US dollar is the third of my watch list this week. And, oh, we've already been triggered into that, by the way. And what I see on pound versus the dollar is not dissimilar to pound versus the Swissy, I must say. If I look at the chart here that's suggesting to us that we're maybe a bounce point, but I see no strength in that at the moment. What I do see on the weekly chart is two things. One, the failure of the bulls off a, well, I won't say a bullish engulfing bar, but I will say a big reversal bar, have failed to put in price that went really to a resistance level. The NFP number last week was an emotive move, in my humble opinion. So if you go back to Friday, the emotive move was bullish. So what I see here is a stronger bearish move followed by the emotive bullish move. That doesn't count for mine, the emotive move. So what I'm suggesting, and everybody knew, you know, sorry, not everybody knew that there would be a Labour number, but I think the market's actually misreading this a little bit. They've headlined the actual employment figure or unemployment figure. What they didn't take into consideration was that, to my mind, the wages being improved, if you like, so everyone's getting more money in their pocket. That's inflationary as far as I can see. So I don't think this print here is valid. What I'm suggesting is there's a false break of resistance here, and I expect pound versus the US dollar to go short. So I think we've got a stronger dollar again versus the pound anyway. Not so sure that's across the board, but versus the dollar, versus the pound certainly, and I'm expecting that this will fall away. So I've got a false break of resistance. I've got a break of resistance, support, retest of all things that I've just mentioned, and I think an entry under here will get you something in the bank. Take profit at that level, but I think this will continue to fall for a little bit of time anyway. They're the three that are on my watch list. I think the best is pound Swissy, and that's why I placed 2 orders on that, and closely followed by CAD Swissy, and up the rear is pound versus the dollar. We shall see. Rightio ho ho. That's where I'm at. I wonder where Ash is. How are you, buddy?
Hi, mate. Yeah, very good, thanks.
You have a good weekend?
I
It's
think
getting cold over there, by the look of it.
it is, mate. We had a really good weekend, but it is getting cold. I mean, it's just wet all the time. It's it rains at night, and then you get the odd gleam of sunshine in the day. And I don't know whether it's because of all the reporting, but it feels wetter than normal at this it's just constantly raining. You know, and the UK is associated with rain, but we haven't had much of it during the summer. It's been a good year till this point, but all of a sudden, the end of October decided to enter, and the heavens have opened. It's just as I say, it's just constant, pretty grim. I've got to be honest, mate. Not a place you want to be if you've got to pop out to work on a daily basis. I have to say.
Well, I've got to say that Australia has been through, I think, the wettest spring of all time. I'm not certain on that, but wow, we just keep getting flood after flood after flood in Australia. It's just crazy, and they're 100-year floods.
Yeah, do you know, mate? It's interesting because
100-year floods in a week.
We've got COP27 going on.
Cheers, Sam.
At this particular stage, and actually, it's driving me towards some market kind of considerations. I've just taken a short in Shell. I don't know whether it's a good call just yet, but I quite like the resistance line. But let me just show you a few things that I'm thinking about here, and one of them is to do with oil, and the other one's to do with copper. And we'll talk about the IFP number, because I totally agree with you. Sorry, the NFP number. Sorry, I totally agree with you that the market seems to overreact somewhat to having the 3.7% unemployment number rather than the 3.6 that was anticipated. So, it's just after anything. It's after anything that gives them a gleam of hope and speculation that they can start shorting the dollar because the Fed are going to raise at 0.5% rather than 0.7% next time out, which is irrelevant if everybody else does the same thing. So we'll see how it works out. But
Stops to entry on the pound, guys. By the way,
you got the entry.
Stops to entry.
Fantastic. So firstly, the euro. Now I'm interested in euro longs, and euro CAD is one of the ones that. A couple of guys I'm teaching over here. I was telling them about Euro CAD, and that they're in that one, and I'm in the Euro Kiwi, as we talked about recently as well. I think the Euro CAD is probably better, and on reflection, I wish I'd gone for that one instead, and not because it's moving, but because of Canada's association with America, and also kind of where they are with interest rates right now in their cycle. Where's the Euro?
So it's your fault that I'm out of that trade. Is that right?
Were you short?
I was until Friday.
Oh, okay. Yeah, I think we might see a push in the euro. I've got an entry on the euro. Sorry, I'm already slightly in the red with the euro, but I've got another entry that I'm going to take down here. But let's talk about copper and silver, gold and oil, because I think these are the really interesting markets right now. Let's start with copper, because copper looks very similar to silver in as much that this huge bar that we got on Friday was off the back of, yes, those numbers from the States with the unemployment, but also the sneaky suspicion that China might well be opening back up again in March. So, full-blown economy back in March, and obviously copper as an industrial growth metal. It does look like a long. And it's kind of me, I'm thinking short. Well, in fact, we'll come to that in a minute. But I'm thinking maybe sort of like some exposure to the copper market with Anglo American or possibly Rio Tinto, which is more iron ore. But you could, what I'm quite interested in is, and I'm looking into it right now, I'm wondering whether there's a hedge trade between copper long and WTI short. And the WTI short is the tricky one for me. I think copper long is pretty good. And the reason I think copper long is pretty good is that when we look at the chart on longer term timeframes, we've kind of managed to bounce off this particular level here. This is a monthly bar right now, so we don't know how that's going to end up looking. But last week we saw really, really solid price action to close out the week. The inside bar right now doesn't give us a decent price, but if it pulls back to some kind of decent level, let me just change this with some pivots as well. If it pulls back to some kind of decent level, and those pivots, they're just a bit high for me. I wonder whether we close this gap and then we do come down and possibly test. And I think the test could be caused by, as you say, the market really reevaluating what they saw with those unemployment numbers. We've got CPIs out on Thursday. I think that's the big headline mover this week.
Sure. They'll be watching that.
Yeah, exactly, mate. And obviously, if that is weak, then if CPI comes in lower than expected, anything under 8% from the States, then I think the likes of copper, silver, gold, and probably WTI as well will probably go up. But I'm wondering with WTI, could COP27 potentially play a part in it? You know, are world leaders going to have some pressure put on them to stop digging out the fossil fuels? And maybe even, one of the reasons I've gone for a short in Shell is that, that so far this government has not been keen on putting any kind of windfall tax on the oil companies that have made such big gains. But it's possible that the pressure starts building on that. So my considerations about oil, it's difficult because the fundamentals of oil are still very strong. You've got the United States drawing down their reserves, and you know there's speculation that they'll be at zero by the time we get into the spring of next year. We've obviously got this situation still going on in Ukraine, and if there's any kind of growth, that's also very bullish for oil. Which is why I wouldn't mind maybe hedging it against a copper long situation. So that's one thing, mate. The copper long and potentially oil short. And I'm wondering whether oil might come off a little bit anyway. But I've chosen to go with a company rather than the actual commodity, because I wonder whether even if the commodity goes higher, the governments will have pressure to go and punish the company. Because they've done so unbelievably well. I mean, you could choose BP or Shell or you know many other kind of oil producing companies.
Have they got the? I'm searching for a word here. They've probably got the will. Do they? No. Well, do they have the will? I'm not sure. How much power, I'll put it that way, do you think, or influence, do you think any government has over BP or Shell?
Well, the only power they have is tax. So you know the idea that we are
that then becomes a circular economy, because if they tax BP and Shell put up the price.
Yeah, well, potentially that is the case, mate. Yeah, that is possible that would start to run in and we might well see some kind of cat and mouse between the two of them, but. I wonder whether BP and Shell might struggle to put up the price anymore. I mean, you know, the amount they've made over the course of the last 12 to 18 months is astonishing, and no company really should be basking in quite that amount of fortune, which is fortuitous.
100%, and well, fortuitous. Yeah, it's kind of a catch-22, isn't it? And I experienced this, you know, many years ago when I was in I'll call it a monopolistic situation. It wasn't my monopoly. I was in an opal mining town in Lightning Ridge, New South Wales, and that produces 98% of the world's black opal, which is the highest priced opal on the planet. Yet it's mined by individuals who refuse to bow to anything at the end of the day. And it's a very similar scenario. Yet it's flipped on its head, because the miners of Lightning Ridge, who are individuals, as I said, and they just go and have a lifestyle that's crazy. They go underground and they pick out their opal and they take it up the surface, and the buyers come into town once a month or whatever the case may be, and they set themselves up in the motel rooms, and the sellers, you know, it's like the old days. It really is a mining situation where these guys come in and they tell them what they're going to pay them for their opal.
Yeah.
How the hell can that work? These guys have got 98% of the world's supply, yet the price has been dictated to them. Now, this is the reverse of that.
Yes. Yeah, I mean, there's already been movements in Europe, you know, to get windfall taxes onto these energy companies. But what the UK have said so far is that they will be taxing anything which isn't reinvested. So, and also, as I say, COP27 is massive, mate. I mean, we are really, you know, probably beyond critical. But when do governments actually wake up? And this is another opportunity for them to wake up. So I wonder whether we might hear something from COP27 which suggests that there is maybe a bigger push into wind and solar and you know, renewable energies effectively. So I mean, it has to happen. It has to happen. It has to happen. It's not like it's something that may happen. It's something that either will happen or we are probably done. So it has to happen at some point. Now, whether it's forced on them because they wait another 5 years, or whether it's something that they get, I can't say get in front of because they're way late on it, but at least sort of, try and get alongside it. Then if they're going to get alongside it, it's got to be being sort of passed through by really this COP27. This COP27 is pretty pivotal in my opinion from what I can see. So do we start to get that push? Do governments start to recognize that with Russia controlling the situation in Ukraine, mainly off the back of their profits from oil, this is something that they can do to counteract that while still actually helping the planet? There's quite a few things. The problem we've got over here, and the issue with something like Shell, taking a short in something like Shell, is that Rishi Sunak wasn't even going to turn up to COP27. So he's already sort of starting to say that he's promoting further drilling in the North Sea for further oil. So he doesn't seem to be like the kind of leader that is going to go against it. So I might be way off on this, but I'm willing to wait, because I wonder whether 18 months down the road, if a different government comes in, it could be all changed. Because if Labour come in, Shell are going to get hammered and pretty badly. So I'm playing the long game with this one. What I really wanted was a hedge against it, and I haven't got that yet. I am potentially going to go for a minor, but I'm just looking at the price of copper and wondering whether we get a bit of a pullback first. The FTSE's opened up, started quite negative, but it's actually started to lift a little bit right now. Now, the other trade I did take on last week was I was in a short on the Nasdaq, and as the Nasdaq came down to the level, and I said that I'd be potentially taking off the profit here, and I did. And not only did I take the profit, but I also reversed positions, and I've decided to go for a long in the Nasdaq. And the reason really for that is the same reason that the rest of the market is doing its thing. I've got a short in Shell because I think that the market could start to dip, but I need one thing that is maybe a hedge against it in a sort of broad sense is a Nasdaq long. I do want silver as well. I'd like to get some silver. I think that silver's a really interesting play.
I'm gutted, absolutely gutted.
Well, I don't think we need to be, mate. I know that the price was probably somewhere in this region, and it's right up here now. But I don't think we need to be too concerned. I still think that there's a chance that the market overreaction on Friday gets reversed somewhat. So if it comes back 50%, then I still think that the value of silver is still very much there, because there's a decent chance that over the course of 2023 we get back to these highs. So again, the question is, what would be a decent hedge against silver? And I've got a silver stock that I've traded against the home builders, because I wonder whether with inflation going higher, we might start to see the home builders suffer because of a lack of support from the buying community. So that's one way to do it. But I also wonder whether you could hedge out silver again with oil. Tricky play, but and it's very speculative. But I wonder whether we might see that. One thing I will tell you though is that when you look at the COT data, which is by no means the panacea of looking into the crystal ball, but the COT report is not yet supportive of silver or gold for that matter. So there might still be something that we could see with silver that could help us a bit more, in as much that we create more of a solid trend before we hop on. But I don't think we need to worry too much. It's a decent bar.
I'm not worried about the long term. I'm not worried because I would have had to take on NFP to get the money, and that's what caused it, right? But there was just a beautiful, beautiful scenario there with that higher low on Thursday. That was a wonderful trading opportunity, and because I was nowhere near the charts on Friday, and because it was NFP, just impossible for me to be in that position, and that happens. But that's why I'm gutted. I'm not the least bit concerned about catching silver yet, because it's at resistance right now. I think it'll come back, and we'll see $18 again, I think.
Yeah,
it
I think we
goes.
will, mate. I think we will. I mean, this first move was off the back of the China news, and then this was off the back of the China, and then obviously the unemployment news as well. So silver had a couple of decent data points that helped it out, but I still wonder whether we could get some nervousness about selling the dollar too early, and we could get a bit of a pullback in both silver and gold. But I do think they are a play. I think that they are a decent opportunity, both silver and gold.
They're coming. The time is coming. Yes.
Yeah. Well, let's bring George in, mate, because George is in the room with us, and see
Hello, George.
What he is looking at.
Gents, how are you doing?
Oh, good, mate. How are you?
Doing very well, thanks. Doing very well. I was just listening to your weather report there, and I'm just wondering if the rain and miserable gods have thrown something onto South Africa, because I'm wearing sweaters and stuff. It's just started raining for the past couple of days.
This is the thing, mate. This is the thing, and this is what I'm saying about COP27. It's not just a meeting of to talk about the climate. We're all starting to really feel it, I think, with climate change. So. This is another opportunity for them to do something, and I guess that's what I'm saying, is that if we then then look at the charts and say, okay, well, where's the opportunity? If COP27 or if the world leaders are going to do anything, surely one of the things they're going to attack is oil. Now, there's a problem with looking at copper in a way, because if there's a recession, then we may not see copper kind of boost up quite as much as it may. I mean, it might go, it might not, but I would have thought with oil. With recession concerns there, and also the fact that it's fossil fuels that appear to be responsible for much of the changes that we're seeing in climate. When are they going to start going after them? I would have thought it would be a done deal at some point. So that's what's leading me towards sort of like looking at maybe the story with oil isn't quite as positive as we think. Obviously. America drawing down their reserves, that's obviously bullish for oil. The lack of supply potentially, that's bullish for oil. What's going on with OPEC, that's bullish for oil. But world leaders have got maybe a way that they could temper that. And wind and solar are the technology is probably there now for them to go, do you know what, let's go all out and do it and take some pain for a year or 5. But come out of it in a completely different situation. So the weather is a part of it. That's sort of that's certainly making me think it's literally it's grim here. I mean, I was going to say brutal, but that would be a bit extreme. But it is grim, and it's been grim for a long time.
Pounds closed, by the way, guys. Pounds hit out 2.5 to 1. Don't be so excited.
All right, pounds goes at a profit. Was that a profit?
We knew.
Oh, well done, mate. Well, we didn't know if it was a stop loss.
No. It's hit target.
Oh, well done, mate. Well done.
Brilliant. Excellent.
Nice to get on a Monday. So, what are you looking at, George? Anything which is relating to the weather, or is it back to the charts for you?
I know it's always better the charts for me. When you were speaking, I'm always, my excuse for not staying up to news is that I'm a price action trader. But when you guys speak, I go and Google things. I've said, what's COP27? And I'm amazed.
Yeah.
It's absolutely everywhere. And I'm saying, oh my goodness, I don't know how you guys keep track of all of these things,
Oh, I have to.
I listen to Ash on Monday. George.
Well, if I don't do that, I've got no ideas. I've got no trade ideas. Just because I'm not really looking at charts as much as you said last week. When you go and analyze charts, I'll go and analyze the potential macros as much as I possibly can to try and get myself some ideas. So yeah, I don't have a choice in a way.
All right, I'm trying to share my screen, but I don't have powers. So
Jeff might be able to do that.
Oh. Now, this is something that I am not used to, but hang on.
So anyway, while you're doing that, when I look at the charts, I'm always trying to find the, there we go. I always talk of the last 3 days, the daily chart gives me direction. So that's what I'm always looking at. So when I came into the market this morning, I was trying to, well, my higher probability early trades was looking for a bit more bullish momentum after Friday, and looking at presently Euro and UK 100. So at the open, I said, oh, fantastic, on this candle here, looks like the bulls might take over the market, but that's not a candle that I trade. So I was going to wait for something, double bottom, breakout, whatever it may be. And voila, we just take off. And I'd look back and say, oh, interesting. I wish this was in my strategies, but it's not. So just let it go.
Yeah.
But if you go to the daily, so here's the reasoning behind it. Now, this is one of those where I say on the daily chart, I am still bearish. Okay, when I look at this high time frame chart, because of all these levels that we've spoken about. But because of that candle there on the 5 minute, I'm always expecting at least some bullish momentum, because the bulls obviously want to, see if they can follow that up, even though they can see all these resistance levels with the big ground number 1 here just above. That's what I look at initially. But I always talk of the last 3 candles, last 3 days candles. And I look at these 1, 2, 3 candles, and I'm saying, okay, this is good for the bulls, but they are buying above a bear candle. That bear candle is a follow through from that outside candle. So although I'm expecting bullish momentum, I think it's low probability that the bulls will break out above that. If something had set up for me, I would just trade it until I see the reversal. So now that we already kind of breaching the high of the previous day, I have to switch my mind to the reality of all these levels of resistance. So going forward, for the rest of the day, I'm going to start looking for shorts, simply because I couldn't get in here. Now, up here, there's no ways I'm buying up here. Well, let me not say there's no ways. The only way I would buy up here is this green line is the high of yesterday. Is if the bulls were to break above that confirmed breakout, that means that this is not a confirmed breakout. You need to see a candle closing above this and a follow-through candle with strength. If we see that and we come back to test that level, then I may think of longs. But presently, because we're in this whole sell zone now, even missed that opportunity, I am looking for shorts. And what I'm looking for, I like it when I see failed breakout, because it might possibly set up for me at some point another third push, tail on top. That will be a form of a wedge top, failed breakout above this. So if I get a couple of candles separation, another third candle with a tail, then I'll say, well, I've got my wedge top, 3 attempts to break out above, failed. Let's see if I get bear acceleration of that. And if I get the bear acceleration, couple of strong candles, then I'm looking for a lower high, somewhere within there. Same kind of thinking on UK 100. Again, and I'll pop up the daily just now, looking up and saying, oh, I think, there might be a little bit more momentum for the bulls today. Looking at that first candle, outside candle, immediately I say, okay, there's a problem for me. Outside bear candle is a big trading range. There's no ways I'm trading anywhere within here. I have to wait to get to measured moves. So there's a measured move. I had a measured move down here. If it's broken down here, that's what I'm interested to look for longs. So if I just go up to the daily. So I was expecting momentum of this candle, because this is an even better candle than on Euro, because the bulls were buying above. The bull candle pulled back. That's decent enough for the bulls. So what I was expecting at the open of the markets just now, get in somewhere here and see how far we can go. But we haven't got that. So now I'm concerned about what we have here. Okay, this bear candle, outside candle with follow through, good for the bears. That line that I've marked, was a breakout level on the 13th. And that's kind of where, bulls tried to break above that. Bears are back in defending. So now the only way I'm going to be looking for longs, again, same kind of thinking. If we break out above that, pull back on the 5 minute. But right now, I'm switching my mind to say, okay, let's just sit back, grab some coffee, and see if we get a reversal setup somewhere within here.
It's an interesting one, isn't it, George? Because, the FTSE has gone in completely the opposite direction to the NASDAQ specifically, but also the S&P. And I think a lot of that is because of the situation that we currently find ourselves in, because we've got oil stocks making up such a big part of the FTSE and mining stocks. So because of the news in China about opening up, that really did push some of those mining stocks close to 10% on Friday. It was a crazy move really in some of these mining stocks on Friday. But exposure to copper, and this is where anybody that's trading indices, it's really useful to kind of look around and see what the particular index is mostly exposed to. So if you see WTI and copper moving higher, going to be very good for the FTSE. And obviously with the NASDAQ, you kind of obviously need to look at technology. We don't have that on MT4, but the FTSE is a little bit easier to read because there's at least a couple of sectors that are on there. But yeah, the FTSE has been interesting, and with the FTSE at near 7%, sorry, just over 7,000, and the NASDAQ closer to 11, 10, 11. There is the spread has really shrunk with those guys. What we saw before was that the NASDAQ over doubled the price of the FTSE. Well, that's really diminished, and it makes it interesting for me is that at some point the NASDAQ's going to bounce back, but we seem to be going through this particular period where stock rotation means that people are going more towards these commodity stocks and more towards these energy stocks, which is driving the FTSE 100 higher, where an index like the NASDAQ is just not moving.
That's quite interesting because when I looked at S&P 500, for example, usually at the back of my mind, I'm kind of saying, well, I'm not really worried about correlations to a great extent because I look at the charts. But today it was very interesting. I looked at the S&P and I said, well, this is interesting. The S&P 500 big breakout, those 3, 4, 5 candles, 4 candles, and this is a pullback. Friday's session, I just said, well, that's a pullback because we're failing to break above the 10 EMA. So what I'm expecting is leg 1 pullback, leg 2 on the S&P 500. I'm expecting there to be more selling.
Yeah.
So I'm kind of looking at it and saying, well, that's
three.
First leg of the move. That's the second, and I'm expecting the market to go there. But that's at variance with what you see on the UK 100 because that's not, that's so clear that hang on a second, these markets are different. So I don't go beyond that. I'm just saying, okay, we're looking for the longs. But now that you're explaining it, it kind of makes sense. That's why there's that whole change in the commodities, the oil, etc. And that's pushing this market up. While on the S&P 500, you can legitimately say there's a higher probability for the market to sell off. While the other market is going up. So I am looking for shorts on the S&P 500. Now, with the S&P 500, like I said before to guys, I keep my eye on it as the day unfolds. I'm not actively worried about what's happening because now I'm in the zone where I can comfortably wait for the open of the US markets and see if what's set up for us. Now, as we go through the day, if I get a decent enough reversal setup in here, I'm definitely going to jump onto it, anticipating that by the time the US markets open, if the bears are strong, we're going to be getting here and breaking beneath the low of that pullback candle on the daily chart and try and get some decent wins for the day, while trying to see if the UK 100 is going to get the bullish momentum or it's already done.
Yeah.
So
yeah. I mean, there's some other levels on the FTSE which I was looking at, which up kind of some upper trend lines that I wonder whether we might need to hit before the market does change. But up in those kind of areas there. I wonder whether we're going to sort of attempt to try and get into that area again. Before potentially coming down, but it's not going to be a technical situation that drives us down. And if the dollar does start to weaken and it does manage to kind of push these commodity prices even higher, then the FTSE is likely to do pretty well in that scenario. And it might well be that the FTSE pushes way beyond its highs, while the likes of the US markets don't do particularly well. I mean, the other thing to take into account, of course, is that the UK, the currency value. If the pound is cheaper, so much cheaper than the dollar, and people see some value in some of the UK stocks and an environment where UK stocks could do much better because people will be buying commodities and energy stocks and energy in this particular environment, then it's even more of an attractive proposition. If you've got a strong dollar, if you're American, you've got a strong dollar, you can go and get a decent exchange rate in the UK and buy some UK stocks. So there's quite a few things that I think stack up for the FTSE where they don't currently stack up for the likes of the NASDAQ. And as you mentioned, the S&P, because of course the S&P's got Apple and Amazon and those guys in its index as well.
Yeah, so I mean, I'm always fascinated by the drive. I mean, fundamentals drive the market, the economy.
Yeah.
And I'm always wondering to myself, how much is baked in already, and how much is still baked.
That's the key. Yeah, that's the key. And I guess that's the interesting thing when you look at something like silver. Silver's come down quite a long way. Now, at this stage, it's had a little sniff that there could be a turning point with that unemployment number and with the news of China potentially opening up as an industrial metal. Same with copper. So at this stage, that particular thing hasn't happened. We haven't opened up the Chinese economy. However, speculators will get in here because of the chance it could happen. And a lot of them will be right. So by the time it comes to March, the price of silver, if that has transpired, will be exponentially higher.
So, I mean, one of the things that, I say to guys is when you trade in the 5-minute chart in particular, as much as you can master price action and get a higher sense of the probabilities, you must always be alert to surprise candles.
Yeah.
Out of nowhere, beautiful day, things may set up and boom, there's this big bear candle or big whatever. And you say, but hang on, there's no news announcements or whatever. But it's those fundamentals that can kick in at any time.
Yeah.
And when that happens, then we just stand back. All you got to wait is 4, 5, 6 candles to get clarity, and then you start to follow the market.
Yes, interesting, mate.
So we always
and you know where those fundamentals drive the market too, George?
Yes.
You know as well as I do.
Yeah.
To a technical level, right?
Yeah. They absolutely.
That's what they drive it to.
That's the thing. They drive it to a technical level as well.
Yeah. You just wait for that technical level to arrive, and then you've got a chance to trading it.
That's it.
Yeah. Yeah, because the fundamentals will drive it to the technical level because, unless it goes through and goes to the next technical level, but eventually we'll get somewhere that particular announcement is priced in, and it's priced in at a technical level. And then they're waiting for the next announcement. And if there's another announcement which is positive, it goes up. If the announcement that was previous is actually quashed, then it comes down again. So it's in some respects it's quite binary in that regard. But staying on top of everything that's, it used to be the case that Mario Draghi would sneeze and the market would fly, because there are these sort of these players that are out there which are huge drivers for the market. But we now live in an age where you've got Twitter and the like, and it means that do you remember when crypto was going all over the place because of Elon Musk? And he didn't even really say anything. And Donald Trump would sort of like come out and tweet, and it would go all over the place. And that's the challenge we have. And you're absolutely right. When it comes down to the 5-minute charts, it made it even more tricky, because not only would the market start to move, but there was no guarantee that that particular move would hold, because it was Donald Trump talking, and he could flip what he said within, seconds, and we could be right back where we started. So the challenges are different. What's that mean?
He hasn't gone away. He's just not on Twitter yet.
No, he hasn't gone away. And we've got the midterms this week, haven't we? So they're going to be a potential driver as well. I mean, we got quite a few things this week which are potential drivers. And really, this is where the question of how you treat fundamentals comes into play. And I think the only way you can really look at it is on a longer time horizon. I don't think you can do it on a short time horizon, except for if you know that there's an announcement coming. The chances that the market is going to go through a level of resistance, if it sits at one, is quite low. So, you can speculate on dips when there's, pre-announcement, because a lot of people will take profit in those areas just in case the market comes against them. So there is a way to play the news on a short-term basis for sure. But for things like China opening up or a potential Fed pivot, it's a much longer term play. The Euro Kiwi that I've got is a long term play. I'm gonna see whether Europe does start to catch up with New Zealand, and when that's happened, then I'll probably close the trade at that particular point, or if it happens, I should say. But those fundamental drivers are much longer term. You couldn't trade it on a 5-minute chart successfully, I don't think.
No, I mean, like UK 100, I've just put, that's our range for this year, high and low. I mean, at some point, the market wants to get to a measured move of this range.
Yes.
That's there. Or that's the bulls. Or the bears, if bears break out beneath here, they want to get down to this level here. Now, what's going to get us there is these structural changes in the fundamentals, if you want to put it that way.
Yeah.
But what you got to do from a price action perspective, if we start to see the bulls breaking up above that, just go back to your basics. Okay, if I say breakout, there's going to be a pullback. I'm going to wait for it, and I'm just going to keep running with it. I mean, we had that long bearish run for months on Hang Seng 50, beginning of the year. So if you had that, irrespective of what has taken place, what looked impossible to get to, the market got to it. You just got to say, every day I get up, oh, another big backhand, let me go, until, we start to get to these extended measured moves.
They play a big part for you, George.
I love that you think it's not possible. And 6 months later, oh my God, what happened? How did that get from there to there?
Where was I?
Yeah, exactly.
So it's the same for both of you. I mean, but for all of us, really, isn't it? That we're interested in the levels almost before we even look at the price action.
Where are things likely to go? And it's as illogical as it would look. And I remember way back when you're talking about this, and you kind of say, well, the measured move is down here. It's like, how is that going to happen? But you've got to trade what you see. You've got to trade what the charts are telling you is a higher probability. I mean, because you could sit there and doubt it and say, I'm not going to sell. And it gets down here. By the time you think, oh, I must, then you get a big reversal. But, it's only coming off a measured move. So
how successful are these measured moves, George? Are they a bit like gaps that are 100% successful over a course of, as long as you leave it for enough time? Or is it something that you kind of go, they don't always make it, but it's just an area that I would look for as a marker?
Measured moves for me are more reliable than even the EMAs.
Right.
They are 95% hit with precision.
Right. Interesting.
So if you just start to look at the basics, whenever I see any kind of a trading range, where is a measured move? If I see a 1 bar doji, where is a measured move? first candle, big candle where the measured moves, they are hit with precision more than anything else. So they are a core part of when I'm looking for reversals to take profits or jump into new trades.
Fascinating stuff, mate.
If I had to drop something, I could drop the EMAs quite easily and just trade off those horizontal levels from measured moves.
Yeah, yeah.
This
Jeff, did you ever do
this
those?
conversation brings gold into focus for me.
Yeah.
And
Let's
we've
talk
spoken
about
about
gold.
it so often, right? We've spoken about it so often.
You can
And it's
grab the screen,
impossible to
mate, and
consider
put up
from a
your
logical or fundamental point of view that gold goes to $1,000. You just can't conjure that in the current environment because it's a hedge against inflation. It's a store of wealth in a very uncertain time. Yet here it is, continuing to sell off. Because
that's a fascinating point, mate. That is a fascinating point. And you're talking about the high from the double top to the current break of price.
yeah, it takes it down to 1,200 or something.
Yeah, it does. Yeah, I've got 1,300, but you're absolutely right. It does come down lower.
And you can't conceive of that, right?
You can't believe it, but it can. That's what the charts are selling you. It's you don't have to be emotionally involved with it. That's the thing.
Yeah, and you look at the euro, go back to the financial crisis, right? The GFC. The euro was at what, 150 or something, $1.50, and you're going, well, this is going to $2 or whatever it's going.
Yeah.
Well, it's parity now, right? So it's lost 60% of its value, or whatever that works out to be. It's just something you can't conjure at the time. Yet here we are, and it happens time and time again. Because in particular with currencies have got a median value. There's no question about that. They've got a fair value, and if they're way up there, there's only really one direction you can think of trading it, and it's back to that median.
Do you know, mate? That's really interesting. But the only thing with a median value, the only way that I would sort of possibly state it differently is that the median value is when central banks are pretty much in sync. But when they start to flip sync, because that's what's happened here, isn't it? The central banks are really what this is where we're getting a trend. And the trends are happening because there is a difference in approach. But when they go back to an approach, that's when we get ranges, and we're much more likely to kind of form these ranges, and possibly that's when we find out what median value really is. But what we've got right now is not a situation where they are doing the same thing. So then the averages start to kind of get pushed out the window a little bit, and we do sort of start to say, well, we're going to follow the money effectively. We're going to get much better return from the United States. It is simplistically put. We're going to get much better return from the United States. So and of course that the kind of the need for dollars. The fundamental aspect in Europe is weak, so we don't need the euro, and we're going to get a worse return from them. So then you get a trend in the euro dollar. I would have thought that the median would return when the market and the world is a bit more in balance again.
Look, 100% on that same track. However, what that actually does, and that circumstance will exactly the same as a news event. It'll take it and it'll take it and take it. It'll trend until it hits a level that is not acceptable.
Yes, which is maybe where we are.
May well be.
Which is maybe where we are, and the reason that I wonder whether we might be there is that the next move on the certainly from the Fed's perspective, not 75 basis points, but 50 basis points. But the euro still needs to play catch up. So then we start to get the gap closed, and then the euro starts to rally. I mean, that's what I'm kind of basing a lot of my
that makes perfect sense.
Yeah,
makes perfect sense. And we're at parity, right?
Yeah.
Figure it out.
Yeah.
It's not going down too far from here, in my opinion.
No. And the other thing is different parts of the world kind of, grow and diminish at different times, don't they? I mean, this is not that everything goes back to normal, but we do sort of like start to see. I mean, there was a report the other day that I think Georgia, just below Russia, is having an economic boom at the minute, and because of people coming into that particular region, and you do get these kind of little pockets where things just seem down in the dumps, and then we start to get some sort of resurgence. I mean, looking through history, you could see that things eventually get broken, and somebody else takes the baton, I suppose, is my point. Greece was the major, the dominant force. Then it passed to obviously Italy and Rome. It passed to the UK at some point. Obviously, it went between sort of different nations in Europe, but it went to the UK. We're on to Germany starting to rise. Now we're on to the States. China's now sort of potentially coming up. India's a possibility. So
you watched that Ray Dalio presentation, right?
I didn't know, but it sounds it makes sense, doesn't it? It makes sense that you've got
absolutely nothing lasts forever.
Nothing lasts forever, yeah. And just like we saw with things like commodities and COVID hit, oil absolutely tanked, and you were actually sort of being paid to have oil effectively.
Zero.
And now zero.
How can it go to zero?
And people were saying at that time it won't go.
It's insane.
Never go back to $100 a barrel again. And look at it now. Which is why you can't discard things like Bitcoin and Ripple and all those cryptocurrencies as bogus, because it's been to 60,000. So now it's been there. The chance it could go back there is 50-50. At least 50-50. It could go into those particular places. Yep. So everything sort of has got the value that the imagination puts on it in the end. But again, could oil go back to zero? I don't see why not, which is why I'm selling Shell.
Gee whiz.
I just thought of something though. I mean, nothing lasts forever except the chart, right?
Yes.
Yep.
The chart, you can pull a chart as long as there's a chart from 100 years ago. And if you remove the date stamp, you would not know what year it is.
No, that's very true, mate.
Yeah.
So
absolutely.
The charts, the price action remains. That's always consistent. Same chart pattern from the beginning.
Yes, which is fascinating, isn't it? It doesn't.
Going back to the first conversation, or where we started the conversation, the fundamentals. If you look at 2008, right, you can see that the market turned in 2008 because of the global financial crisis.
Yeah.
But where's it gone to? It's gone to a support level and bounced again.
Yes. Yeah.
And it will continue to do that, time immemorial.
Yeah.
We'll just continue to do that. If we take a macro approach on those scenarios, the problem is, of course, you're trading on a 10-year time chart, and that's a little bit interesting because you've got to have lots of cash just to hang around for 10 years to wait for this to actually play out, and that's not the game that we're playing. But increasingly, I can, and that's why I find it quite fascinating to trade on weekly charts and daily charts, because the picture to me is far clearer on those charts than anything else. But as we just said, a chart is a chart is a chart, and it really doesn't matter at the end of the day. If you apply the same strategy, the same system, the same methodology to every single chart, you're going to get the same result. It'll either be quicker or slower. Pretty much that's it.
Yeah. Very true. Well, let's wrap it up, guys. We are just over the hour. Fascinating stuff as always. Really enjoy Mondays. Actually, I mean, I enjoy Thursdays, but having you in there with us, George, it just it adds a completely different complexion, and it's a really enjoyable day, I think, for I don't know, TT. I'm not sure if everybody else feels that way in the room, but I certainly do.
Thanks, mate.
So well, thanks for being our trading buddy as always, and of course thanks to you, Jeff, for being the main man doing all the controls back there in the.
It was high pressure at this end, I can tell you.
Doing a great job, mate.
It's
Producing
unbelievable.
and trading and imparting knowledge. Thanks to the guys in the room. As always, really good to have you in, and hopefully there's some guys out on YouTube. We'll have a look at that later on. But we will see you on Thursday. George has got something on Wednesday, I'm presuming.
Yep, live trading profits, 6:30 p.m. Sing for 45 minutes.
Fantastic stuff. Fantastic stuff. And where do they get links for that, George?
They are on the ATW social media chats. Yeah, they're all there.
Okay.
Yeah.
So join George on. Well, go on, mate.
No, I'm saying if they just go into the premium traders box and all sorts of things, they'll find the links there.
Fantastic stuff. All right. So join George Wednesday. We will be back Thursday. Have a great week, guys. I think Thursday is the main event with the CPI data. I think that's the big one this week. There's a few things happening this week, but I think Thursday could be interesting. Governor Lowe as well. I wonder whether he's going to say something of interest about the Aussie. Incidentally, the trade this week was the Aussie Kiwi short.
Man, I've been calling that for 2 months, and I missed the bloody thing.
Yeah, I think it's still on for a little bit longer, but it has come down a long way. So
it has.
Err on the side of caution with that. But
I got a little bit out of it, but not much.
That's the trade of the week. I mean, it's been an absolute obliteration, really, of the Aussie. But that might be a driver of that particular that particular pair. You got that, and you got something out of New Zealand as well, which I can't. It escapes me right now. It might be unemployment numbers, but 1.070 somewhere around about there. I would have thought is a potential target for the Aussie Kiwi short, but. Good luck with anything that you're trading, guys, and enjoy your week.
Interesting, the conversation that we've just had, however, suggests to me that the Aussie, not so much the Kiwi, but pick a weak currency. I think the Aussie has got a little bit of potential because the China situation, the commodity situation, and it has been sold.
Fair point, mate.
Yeah, I think the Aussie's got a strong chance of recovery this week, and just got to pick a currency to trade it against. I'm reticent to call the dollar, but it has formed a nice inverted head and shoulders on the Aussie dollar.
Yeah, the dollar does seem to be one of the potential options. The Swissy as well, I quite like for some shorts this week.
Okay. All right, but
Aussie Swiss long.
Aussie Swiss, okay.
Yeah, as a long trade could be interesting.
All right, I'll leave it at that. I'll give you my my trades of the week: pound Swissy short, pound dollar short, and the euro at the moment. The dollar's really weakening at the moment. That's good because it's going to give us a far better price on everything. I think euro dollar is a shoe-in if it sets up today, because it's a long way from the daily pivot, which is untested. Where are we? Not even at DR1 yet, but if we get to DR1 and put in like a double top or something like that, and then a lower high, euro dollar back to the pivots looks good to me. Could be a worthwhile one. You may have to wait well into to London. Where is it? That place and that big two things. US.
Yeah.
You may have to wait till the US session for that to set up, but the higher it goes, the better that trade's going to be. So don't be dismayed by the fact it's going the wrong way at the moment. All right, let's go. Happy week, everyone. Hope you have a wonderful trading week, and thank you for being our trading buddies. Thank you all. Bye for now. See ya. I've got to press some more buttons now.